The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, pretty tough day across the board on Tuesday with grains and oilseeds under pressure, livestock too, especially the cattle trade under pressure, crude oil down, really just, we'll call it a risk-off day, really, across the board. Well, we're going to have a conversation about it. We're going to talk about what's going on in these markets and look ahead as well to the WASDE report coming up on Thursday. Want to get some thoughts on that and more. Joining us, Matt Bennett with agmarket.net. Matt, it's good to talk with you again, my friend. I hope you're doing well and got that fall harvest wrapped up there in central Illinois.
Yeah, we did. It was very fast in my part of the world. I hate to even talk about it. I was still talking to some of my growers, in Indiana, Ohio, parts of Michigan. I'll tell you, some of those guys are just having to mud stuff out. Guys and gals up there are struggling, in my opinion, but they're finding pretty good yields. Some of these late season yields, I think, have been pretty impressive. And I think that's been, kind of a whisper, if you will, that's kept its thumb on the markets to an extent. But yeah, we got along really well. I hate to talk about it too much, though, Jesse, because we didn't have record yields. We had good yields, okay, yeah. APH plus, but it wasn't a record. I'll take it for sure, given the kind of weather we have this year.
Well, I'm not going to press you too much more on those yields. At least right. You got things wrapped up, and we'll hope our friends in parts of the Eastern Corn Belt that you mentioned who are struggling can get things wrapped up. And some of the folks too in the Northern Plains who got buried under some snow, hopefully they can get wrapped up here soon. Let's talk about these markets, though. To your point there, corn, kind of keeping a lid on things. We got a lot of corn out there, and I think that is something that's very interesting. Just your thoughts. Let's start with the corn market. We just can't seem to really go anywhere. Corn's kind of caught in the middle, it feels like, between soybeans and wheat right now. And again, we just got a lot of corn out there available. Is that kind of your estimate here, as we're just range bound and stuck here through harvest?
Corn's been a dud for a long time. Last week, you come in on Friday and you had a real strong showing. But then you look at the weekly change, you're down 3.5 cents on the week. You're like, oh, golly, but it was a rough week before that. Nobody wanted to buy corn. You're trying to find a story in here. And I don't want to talk about corn first, but I have a hard time talking about corn without beans right now. For instance, today, you come in here in the morning part, beans are up double digits, just motoring right along. Corn can't find black ink anywhere. We're down a penny. It's just trying to get on the positive side of the ledger. And then all of a sudden you start to see this bean price kind of backing off a little bit. It's like, better watch out. And sure enough, we go down there and we try to test that low D's corn down to 468. That's triple bottom, if you will, if it holds. That's a big if right now. You still got harvest going on. Yes, you're in the latter stages. But I'll tell you what, Jesse, you're going to have something. You got to feed a bull every day, and right now there's just not a whole lot of bullish info out there for corn. You look at the world balance sheet, you look at the U.S. balance sheet. Demand, yes, has been a little bit better than what we thought. But at the same time, I'll tell you what, stocks are growing both in the U.S. and world. And I'll tell you what, without a super late first planting of soybeans in Brazil, which I know they've had issues, but without just a major disruption in the planting of the safrinha crop, I struggle to get real bullish in here. I think we can find support, but I struggle to get bullish.
Well, to your point about can't really talk about corn without soybeans, I think you bring up a great observation. It's something I've seen here over the last couple of weeks, is that even when soybeans rally, and we've seen this meal-led rally and more, corn just, it finds it tough to try and go along. It's like soybeans are looking at corn like their little brother saying, hey, come on, come rally with me. But corn just does not want to follow. And to your point, nothing out there to feed this corn bowl right now.
No, there's really not much out there. I mean, we get a little business from Mexico, but that's pretty much expected. We know Mexico's going to be buying corn off of us. It's nice to see it coming on the morning wire. I believe we got one yesterday, but yeah, right now it's just kind of a tough go. You got the report out here this week. Are we going to go up on corn yield? I mean, typically November's pretty quiet. We know that, but with September being the first time you get in the field, I think you're going to see the tendency to where November you could still see some smaller adjustments potentially. If I had to adjust this corn crop, and I know people don't want to hear this, I'd take it higher. I mean, I'm sorry, but virtually every grower I've talked to in the last 2 weeks has said they're pleasantly surprised with their corn yields. And so, I don't know. That's hard to ignore, Jesse. I mean, 173, is that going to be your final yield? I'd bet good money that that's too low. How much? I don't know. I mean, I've seen some 175 and changes out there. I don't know that you're that high, but I do think it's above the 173 type level. And so you've got to understand, you're already talking a 2-1 carry. You're coming from a 135. What if it's a 2.2 or a 2.3? If it is, I mean, obviously you're almost $1 billion above, a year ago. So, I've been saying all along, I can see some short-term, support, if you will. Whenever I look at, for instance, the post-harvest bounce, whenever I look at the weather issues they're having in South America, those things lead me to believe that I'm less bearish old crop than what I am new. But I think with new crop, you've got to stop and look, hey, what if we plant 92 million acres this next spring? Mm-hmm. Yes, fertilizer was cheap. Most people booked it cheap. Thank goodness, because it's been creeping up here lately. But fertilizer is fairly cheap. What if we plant 92 million acres and we've got a 2.2 carry out to start with? What's that put carry out at the end of the next year's marketing year? I'll tell you what, you come up with some fairly large numbers. So a person needs to be cognizant of that. And I always talk about locking in worst case scenarios. And I think that this market and the way that it's acting gives us a pretty good example of why we want to look at that.
So thinking ahead of the WASDE report here, I know there's been a lot more emphasis on farmers selling of soybeans, but I wonder, should we be thinking about, and especially with some better than expected yields, maybe some extra bushels for farmers to play with out there right now, should they be thinking about doing something with their corn marketing ahead of this WASDE report in case this market slips through some support underneath it and goes a bit lower? Matt, I guess, what's your thoughts risk management wise here?
Yeah, if you get below 467 3/4, you're probably going to 450 in short order. I'm sorry. It's just the way it's going to work. If the market goes below that, you would think pretty strong support here at 468, 467 3/4. Third time we went down there and checked it. The problem is if you do have enough selling to push you below it, it's pretty rough. And so I don't know, Jesse, I'll tell you what concerns me with the corn market, whenever I look at it as a whole, is that, I mean, in essence, you have to have someone willing to step in and buy this thing. Cattle feeders, are they going to be buying it? I think that they've been in a wait and see type approach. They feel like the crop's getting bigger too, and so I think they're probably legging into their purchases. But, whenever I look at it, what should I do? If I've got all this corn on hand, we've been telling people, hey, if you've got a ton of corn in the bins, you got to understand what the cost of ownership is. I got to understand interest rates are high. I've got to understand that getting the money in hand and paying off operating, that's a big deal whenever you start talking about interest costs. And so, just simply holding on to the corn is probably going to be around 4 cents a month based on interest costs, cost of money, cost of ownership, and so on and so forth. You look at commercial, I know some folks that are doing dump fees of 30, 35 cents and then 4 cents a month after Jan 1, that's expensive. I mean, that's especially in this game. Okay. So I don't want to get too far into the weeds, but Jesse, here's the thing. 23 is not going to be a good year for a lot of people whenever it gets right down to it. Now, some of these folks with big yields later on, I think it's a pleasant surprise. They're in pretty good shape. But overall, how many of us booked extremely high fertilizer a year ago? And I'd say most of us, including this guy right here. Now, I was preaching, hey, let's at least cover these fertilizer costs with, some corn sales. And so we were able to step in and do that on a fair amount of corn. But the people that got themselves in trouble on 23, they bought high price fertilizer, and they didn't end up selling enough corn. We got to be careful not to make the same type of mistake on the 24 crop, thinking, hey, fertilizer is really cheap. What's the big rush? Well, Jesse, what if you and I are sitting here talking a year from now and corn's 375? And I'm not saying it will be, but what if it is? We got to be cognizant that this market's going to go wherever it wants to go, and none of us can do anything about it other than protect ourselves.
We are having a conversation today with Matt Bennett from agmarket.net. And Matt, we got off on a corn tangent, and we probably should have started with soybeans because that's a little more of a positive story. So let's go there now.
Yeah.
Beans, you mentioned this earlier, did fall back a bit as we went through Tuesday's session, but we've seen this meal-led rally, a much tighter U.S. balance sheet. I have to think that Novi contract in delivery, a lot of end users are looking for beans, and that might have been driving that contract a little bit on Tuesday. What do you think?
Yeah, I believe so, for sure. I mean, you're close basically 18 cents off the high as far as Jan beans are concerned. Certainly, it was not the best day, but at the same time, beans have had a pretty good run here lately. I mean, if we stop and look at what have we done in the last 3-4 weeks, obviously bean market has been the leader here to the upside. Some of these contracts have put 60, 80 cents on, and so with that being said, I guess you got to ask yourself what is to come, and the only way that this bean market continues higher, in my opinion, is if you continue to see major weather issues out of South America. Nobody knows what's going to happen down there. You've got extremes though. The people that are getting rain, they can't quit getting rain. People that can't get rain can't catch rain to save their life. And so, is this going to change? Is this pattern going to change? And you've got to think that at some point it's going to change to an extent. But that is what's been leading the bean market. Yes, bean meal has certainly been a huge catalyst in keeping the bean complex propped up, if you will. Bean meal, whenever you think about Argentina, no bean meal, no beans. That's pretty much the situation they're in. They had a massive drought last year. The U.S., we're sitting here crushing beans like it's going out of style, and we're making money doing it. And it's a really darn good thing that we are. But it leads you to the discussion of, how's this bean meal going to play out around the world? People are coming to the U.S. for bean meal, and we've got it, because we're crushing beans for renewable as much as what we are, for soybean oil as much as what we are for soybean meal these days. So, I think the U.S. is going to continue to get more of that global market share. But in a nutshell, if we just want to break it down to where we're at, it's a tight situation in the U.S. and it's not tight for the world, Jesse. So keep that in mind, as you do your marketing. We've had $13 beans for 24 here recently, whereas we were closer to 12 3-4 weeks ago. And so I don't know. I mean, does $13 work for you with today's input costs? And the simple answer is yes, absolutely. That doesn't mean you go out and sell the whole farm. But some sort of a flexible strategy to lock in $13 makes a lot of sense to me on 24.
And I've heard that same chatter from some farmers as well. I've heard some taking advantage of this 23 crop and some of the decent basis levels that are out there. And to your point about the U.S. supply's tight, world supply's not, they're saying, hey, I make money here. I'm happy. I'm getting out of this market before something cuts its legs out from under it. But then as well, I'm hearing some of that talk about making some sales on 24 beans with this recent rally as well. And you mentioned this earlier, you got to know your cost of storage and interest rates and more. And it just seems like more farmers are willing to sell beans off the combine here this fall and maybe store some more corn. It just seems like there's a lot more beans moving to town right now, Matt.
Absolutely. And typically the farmer is not going to store soybeans at home, on a grand scale. Yes, there are a few folks, there's some exceptions, but most of the time the producer is going to sell beans off the combine if they're going to sell anything, and go ahead and store the corn at home. People like storing corn. I think there's a lot of folks that looked at it this year and said, you know what, maybe it's not the best thing to do, but I'm going to go ahead and fill all my bins. My thought all along is you've got to understand, of course, there's a cost of putting it in, cost of taking it out. If they're going in the bin though, Jesse, whether it's corn or beans, how are you going to handle those bushels? What are you going to do to make those bins pay? And so whenever it comes to soybeans, I do think, they're still carrying the market. It's pretty clear that we all know we're going to need beans throughout the marketing year. because we're going to be crushing beans throughout the marketing year. And so, I think that there's still going to be a demand for beans, but Brazil is planning on a pretty decent uptick in acreage. And so if their weather would normalize, I do think they could still have a fairly decent sized crop. Now, at the same time, they went through the ringer here at the start. And so, but it's April, May timeframe, I guess, is what we need to think about as producers. That's kind of where they're at in their calendar as far as their growing season. It's still fairly early, so you've got to think some things could get rectified here. But absolutely, this bean market, if you do continue to see this kind of strength, or even just today, Jesse, this has been a bit of a gift. The U.S. Didn't have a stellar of a crop by any means, but when you look at world supply of beans, once again, if you end up at a 115, you could be looking at basically, a record world stock situation as far as beans are concerned, and if that's the case, I mean, what kind of a rally are you looking for? If you're a grain originator, are you going to chase $13.50 to $14 beans around? Yeah, probably not.
Well, and Matt as well, you brought up the world number there again too. Do you anticipate any changes at all from USDA on the WASDE report here coming up on Thursday on the soybean side? Anything stand out to you?
Probably not. I mean, if they do change something on beans, I'd be a little cautious. What if they go ahead and tick that yield up just a little bit, and I feel like, relatively speaking, you've heard a lot more good yield stories on corn than you have beans. Beans the early yields were fantastic. I mean, it's almost across the board. I heard producers say, hey, my earliest beans were great, and it tailed off from there, but I still had a good bean crop. I've heard that from a lot of folks. And so could we end up taking the yield up a little on beans? Maybe. I'd put my money on corn going up more than I would necessarily beans. On the world front, I don't think the USDA will start messing with South America just yet. But I'll tell you what, looking forward, Jesse, that January report's going to be a massive report. It always is big, but I could see some big adjustments as far as South America is concerned once you get out to January, because by then you're going to know a whole lot more information. You'll be so much farther along in their growing season. You could see some monumental shifts in this market, as you get towards that. So, I think for right now, I don't expect a big time report on this November deal. It's typically a pretty benign one. Yeah. But at the same time, you should probably always understand that you can't, trust that a USDA report day is going to not have some volatility, because anytime that you get too comfortable, you end up seeing some sort of a massive report. Eat your lunch.
That is very, very true. That is a great point to remember. You mentioned cattle feeders earlier. I want to talk the cattle market real quick with you. Yep. We've seen markets, futures pull back here quite a bit since the last time you and I talked. I just wonder, though, are we trying to go down and test some support levels to bring this cattle market back, or what's your thoughts going on this cattle trade right now?
Yeah, I mean, here's the thing with the cattle deal, we all know that cattle on feed is essentially, it was a bearish report, this last one that we had. At the same time, we all know that the cattle herd is 65-year lows, and so what's cattle on feed going to look like moving forward? It's a well-known fact that it's going to be very tight. Okay. And so, you've got to weigh that, how much has the market anticipated that? Was the run towards $200 the last shot we had at that magical $200 as far as fats are concerned? And I'm not sure that that's the case. To be honest with you, I got to think that you're going to get into one of these cattle on feed reports. It's going to be like an 88 or an 89 cattle on feed, and the market's going to be like, whoa, we went ahead and got this market current, as well as figured out that the numbers that we have on hand are just not going to be able to keep up. Here's the thing. Over the last year or two, with these high cattle prices, people have been feeding all the heifers they can possibly feed. And so those numbers were already elevated. But as the herd size shrinks, you can't keep cattle on feed the way that it was the previous year as you continue to dwindle this herd. And so I don't know. I think for the time being, yes, you're probably going to try to find a little bit of support in here. But a person who wants to get super bearish whenever fundamentally, I'll tell you what, it takes forever to build a cattle herd, and nobody wants to do anything with these heifers right now other than sell them, because they're 16, 18, $2,000. And I don't blame them one bit. I mean, why would it, with the cost, if we're going to talk about cost of money, for a rancher, what does it cost them to retain that heifer and hope to God they get that first calf out of her that's healthy? I mean, you could turn her to cash for $1,800 today, or you could bet on the come. And I totally understand, as a cattle producer, we want to retain those heifers. But at the same time, I also understand that it's a risky proposition, especially from a financial standpoint.
Matt, great stuff as always. Before we let you go, anything final? We didn't even get to the crude market that broke another 3% on Tuesday. So if you want to touch on that or anything else you want to mention for us here today.
Yeah, I mean, the CRB took a hit today. I didn't even look at it, but commodities across the board, gold, silver, all energies, you name it. It was a rough go. But bottom line on the energy markets is that, I don't know how much you're going to beat them up. But at the same time, I'm like a lot of folks. You see conflict in the Middle East and crude oil doesn't go hog wild. It's kind of strange. And so you got to ask, what's going on there? I think a lot of people were anticipating, hey, there could be some issues in here. We're going to go ahead and sell this little pop in the market because we don't think it's going to get super carried away. I can't predict this oil market by any means. This is a tough one to predict. But do I think we're going to go back down to 70 and below right now? I struggle to think that, especially with what we've got going on, as far as the world standpoint is concerned. So I think moving forward, overall, these markets have got to tell us as producers, because I know there's a lot of ag folks. This is who watches this, is that we got to manage risk. You don't know what tomorrow's going to bring. And so I do think there's some really good opportunities to make 24 a much better year than 23. Thank goodness. 23 wasn't a horrible year. It's just that you're coming off this huge slide in commodity prices overall, whereas we had $6 and $7 corn. And I know a lot of people were rooting for $6 and $7 corn, and I think now they'd like to punch themselves in the face, because when you realize what happens on the backside of those high commodity prices, it's not fun. It's not fun whatsoever. And I hope that we don't get into a 13, 14, 15, 16 type situation, because it got pretty ugly there for a while. But by all means, I think we're going to have a bit of a haircut whenever we come off those prices. So manage risk, lock in worst case scenarios, and do your best to stay profitable.
Well, I know folks can reach out to you and the team there at agmarket.net. Check out your intel and so much more online, again, at agmarket.net. We've been talking with Matt Bennett from agmarket.net today. Matt, always good to have a conversation with you, my friend. Thanks so much. Have a great one, and we'll talk to you again soon.
Absolutely, bud. Thank you.
And that's going to do it for Market Talk here today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.